What is going on, investors? Hopefully, you guys are doing well out there. It is an exciting day because we have Google Q1 earnings crossing just moments ago, and I am seeing in the after hours, after being down about 2% during the regular trade, shares are bouncing back a shade over 3.5% in the after hours. That is after the company reported their Q1 earnings. On today's show, there are some very critical things from a financial perspective we are going to get into. We're going to take a look at the revenue, the profit. We'll take a look at the different business segments, YouTube, more importantly, Google Cloud. We'll talk about the balance sheet, the cash flows, the all-important operating profits as this company and a lot of big tech companies have been cutting expenses. We'll see if there's any evidence there. And then we'll come over here and look at this from a technical perspective. We've been talking about this one for a while. It has been churning up. Looks like it's starting a new uptrend, and it is confirming that to a lesser degree in the after hours. Now, over the last year, you're down about 15.5%, but year to date, this stock has rallied by about 16.5%. The company beat on the top and the bottom line. More importantly, they announced that they will allow the company to buy back an additional $70 billion worth of stock from time to time over the years. When we get over to the cash flow statement, I'll show you how much the company bought back in terms of Google stock just over the last 3 months. Revenue came in at $8 billion. Last year, you were at $68 billion. So you were relatively flat on that top line. But I tell you what, a lot of people thought maybe things would get a lot worse for Google this quarter. They were still able to hold some gains. I'm sure if you strip out currency fluctuations, it's probably slightly larger than this as well. Last year, they grew the company on the top line 23%. This year, just 3%. I see they strip it out for you here. A 6% gain on constant currency on that revenue side. Again, you're not going to get a gigantic multiple. Okay, the company's trading about 20 times when you look historically. That's somewhat low for Google. Well, you're not going to get a big multiple if you're only growing those revenue 6%. So the company is going to have to reaccelerate that. If they reaccelerate that, you'll see multiple expansion at Google. Operating income coming in at 17.4. We'll get into that more in depth here just a moment. Now, I want to take you through the different business segments that Google operates. Obviously, you have Google Search. Everybody is aware of that. Still humming right along. I tell you what, all the chat GPT and all that noise still humming along. $39.6 billion last year. Kind of a no growth business, up to about $40.4 billion. Over here on YouTube, $6.9 billion worth of revenue last year, up to just $6.7 billion, down to $6.7 billion. Roughly flat, but I tell you what, if you're a YouTube creator and you're looking at your earnings, they're probably flat as well. Your Google network, $8.1 billion last year, slid down to 7.5. That's your network of websites that show AdSense ads. All in all, your advertising business basically flat, down just fractionally year over year on a revenue side. They have Google Other here. This is your Android. These are your Pixel phones. This is ticking up just a little bit. Now, the most important thing from a segment result standpoint, at least this quarter, is Google Cloud. I will show you, and we've talked about this numerous times here on the show. Last year, $5.8 billion worth of revenue. Boom, all the way up to $7.5 billion. But those of you that have been following this channel for a while and been watching our Google earnings reports know this is not profitable from an operating profit standpoint. So off of $7.45 billion, take a look, folks. Google Cloud turning an operating profit. This is your operating income. So off your services revenue, which is advertising, Android, your Pixel phones, you got about $62 billion worth of revenue. You had $21 billion worth of operating profit. In the past, that was the only profitable unit at Google. It looks like to me we've hit a tipping point when it comes to Google Cloud. $7.5 billion worth of revenue generated. Yes, not much. I mean, we're talking about a multi-trillion dollar or a $1.3 trillion company. $190 million worth of operating income's not going to move the needle a lot, but if you factor in where are we going to be on the revenue side for Google Cloud next year, 4 years from now, 5 years from now, we have finally turned profitable from an operating perspective on Google Cloud. and that will likely drive the shares higher into the future as well. When you come over to the balance sheet, you can see why they authorized that the company could buy back another $75 billion worth of stock. They've got, what's that, like $125 or $115 billion worth of cash, balanced off by very little debt, which they paid down a little bit in the most recent quarter. Come over here and let's see if there's any evidence of these cost cuts at Google, because as you know, you've been following the news, they've been eliminating employees at Google, but most of that still has not passed through on the operating side. We had our $69.8 billion worth of revenue. Cost of revenues coming in at $30 billion. That was up from just fractionally 29.6 last year. Research and development ticking up considerably, okay, from $9 billion all the way up to $11.5. Sales and marketing from $5.8 up to $6.5, and your general administrative also ticking up. So over the last year, our total costs and expenses went from, we'll call that 48 up to $52.4 billion, outpacing our revenue growth over at Google. So what did that do to our income from operations? It had it slide in the wrong direction. $20 billion of operating profit last year, down to 17.4. Again, on relatively flat revenue growth and increasing expenses. This is why this company needs to likely continue to reduce those operating expenses. Now, you flow down to earnings per share, and it doesn't look that bad, from $1.23 down to $1.17, but understand that that's manipulated a little bit by the fact the company continues to buy back shares. This is why we don't typically analyze companies from an EPS standpoint, especially ones like Google that are executing a large buyback, because it can mask some of the earnings degradation that this company's experienced. Now, you come down here to the cash flow. We get a 3-month view of cash flows. Last year, net income was 16.4. This year, $15 billion. We get to add back in things like stock-based compensation, dollar for dollar depreciation, some accounts receivable. Come down here to net cash provided by your operating activities. I call this operating cash flow. Last year, you're at $25 billion. This year, down to $23.5 billion. So despite, relatively flat growth on the revenue side, the fact that the company still hasn't realized a lot of its cost cuts, this is good enough. Honestly, this is good enough. Companies slowed down their investments in property, plant, and equipment. I know they canceled their big expansion plans in San Jose for a mega campus out there. Has the lawmakers and citizens of San Jose a little upset since they tore up a little bit of the city in preparation for that. Used very little of this $23 billion on these financing activities. So you come down here to your repurchase of common stock, coming in at $14.6 billion last year. In one quarter, they bought back $13.3 billion worth of stock this year, all the way up to $14.6 billion. They issued some debt, paid some back, and that was about it. They added about $4 billion to their cash pile just over the last quarter. There's going to be some employees of Google that are looking at this and saying, well, we had $23 billion of operating cash flow, and you spent just about $3 billion on investing activities and another $16 on buybacks. Certainly, I can't lose my job, but again, when your revenue is basically flat, investors are not going to give a premium multiple to a stock like that, and Google's going to need to reaccelerate that revenue. But these results are good enough. I'm seeing in the after hours, shares are up almost 5%, or basically $5 per share. Earlier in the day, we closed right here at 103.85. Now the shares have kind of perked up really to the highs that we've seen. This is exactly what you want to see from a technical perspective, folks. You want to see a series of higher lows. We've been making those. You want to see it confirmed with higher highs. If we can open up above 108, 109, and really close there tomorrow with Google. If this stock can close at 109, 110, it will just solidify again. I think these are good enough to be considered higher highs here. Technically, you need to get above these highs, which are like 108, but this stock is confirming higher highs, higher lows. What does that mean, folks? Means the stock's basically in an uptrend. That is when you buy the dip. You don't buy the dip in confirmed downtrends. You can buy the dip in these uptrends. Google stock pulls back over the next couple days or months. I could see us getting back down to that $100 level that is a level where you can buy the dip from a technical perspective. Conservative investors in that scenario can put stop losses right here at 90. Less aggressive, you could put a stop loss at 85, or the very bottom, you can put a stop loss underneath 83. If you get underneath 83 on Google, you're coming down probably to about $70 per share. But these results are good enough to hold what is not a premium multiple on a stock that, while they're not continuing to grow their top line, they're going to grow that bottom line and those operating profits and that cash flow. And in the meantime, they are going to buy back a boatload of stock over the next couple of quarters and couple that with some efficiencies when it comes to staff terminations and reductions in cost. And yeah, I can see why this stock is forming an uptrend. That was Google for Q1. We'll be back again with more, obviously, on Friday with more analysis of these results. Hopefully, you guys have a wonderful day out there. We'll be back soon. Good luck with your investments.